All right, ladies and gentlemen, welcome back to Crypto Brain, because right now a fascinating discussion appears to be quietly developing across the digital asset market. And unlike many of the headlines dominating social media, this conversation is not being driven by retail speculation, meme coin hype, or short-term price predictions. Instead, the discussion appears to be revolving around something far more significant: institutional infrastructure, tokenization, and the future architecture of global finance itself. Perhaps most interesting of all is the fact that BlackRock, the world's largest asset manager, continues to sit at the center of many of these conversations. As Wall Street accelerates its exploration of digital assets, investors are beginning to ask a much bigger question. Is BlackRock simply following a broader industry trend, or could some of the largest financial institutions on Earth be quietly preparing for a future that most retail investors still fail to fully appreciate? Because if that second possibility proves correct, the implications for blockchain-based financial networks could be significantly larger than most people currently realize. For years, cryptocurrency was viewed as a separate financial ecosystem operating outside traditional finance. Banks had their infrastructure, stock markets had their infrastructure, and crypto existed in its own independent environment. However, that narrative appears to be changing. Today, some of the largest financial institutions in the world are no longer debating whether blockchain technology matters. Instead, they are increasingly discussing how blockchain technology could eventually integrate with existing financial systems. And that distinction is extremely important because when institutions move from questioning a technology to exploring implementation, the conversation enters an entirely different phase. Suddenly, the focus shifts away from speculation and towards infrastructure, away from hype and towards utility, away from short-term excitement and towards long-term strategy. This is precisely why BlackRock continues attracting so much attention. Not necessarily because of any single statement or announcement, but because BlackRock often represents something much larger than itself. Investors understand that organizations managing trillions of dollars rarely focus on short-term trends. Their decisions are usually based on long-term structural opportunities. And whenever BlackRock begins exploring a new sector, Wall Street pays attention. Not because BlackRock controls the market, but because many investors view BlackRock as a reflection of where institutional thinking may eventually be heading. This is why discussions surrounding digital assets, tokenization, and blockchain infrastructure have become increasingly difficult to ignore. At the same time, another important development is quietly taking place. The conversation around tokenization appears to be expanding rapidly. And for many investors, tokenization could ultimately become one of the most important financial themes of the next decade. Because tokenization is not simply another crypto narrative. At its core, tokenization represents the process of bringing traditional financial assets onto blockchain-based infrastructure. Stocks, bonds, money market funds, real estate, commodities, and potentially trillions of dollars worth of assets could eventually operate through digital networks designed to improve efficiency, transparency, settlement speed, and liquidity. If that transition continues accelerating, the implications for global finance could be enormous. Naturally, this raises a critical question. If financial markets gradually move towards tokenized infrastructure, what types of blockchain networks could potentially benefit from that evolution? And this is where XRP frequently enters the discussion. Not because institutions have officially declared XRP as the future of finance, but because XRP has historically positioned itself around cross-border payments, liquidity solutions, and financial settlement infrastructure. As a result, whenever conversations begin focusing on global liquidity movement, settlement efficiency, or institutional blockchain adoption, many investors automatically start monitoring XRP more closely. Whether those expectations ultimately prove correct remains uncertain, but the discussion itself continues growing. What makes the current environment particularly fascinating is the growing difference between retail perception and institutional focus. Retail traders often focus on what could happen tomorrow. Institutions focus on what could happen over the next 10 years. Retail investors often chase momentum. Institutions build infrastructure. Retail traders ask whether a price will move next week. Institutions ask whether an entire financial system could evolve over the next decade. Throughout financial history, some of the largest opportunities emerged when the public focused on short-term noise, while institutions focused on long-term structural change. And that is exactly why experienced investors continue monitoring developments surrounding tokenization so carefully. At the same time, uncertainty remains extraordinarily high. Nobody knows exactly how quickly tokenization will expand. Nobody knows which blockchain networks will ultimately dominate. Nobody knows how regulators across different regions will respond. And nobody can accurately predict the timeline for widespread institutional adoption. However, uncertainty itself is often what creates opportunity. Markets rarely reward investors once every outcome becomes obvious. Historically, some of the largest financial opportunities have emerged during periods when uncertainty remained elevated and public opinion remained divided, and that division appears increasingly visible today. One group believes blockchain integration will happen far more slowly than enthusiasts expect. Another group believes Wall Street is quietly preparing for a transformation that could eventually reshape large sections of global finance. Both arguments contain valid points. Yet the fact that these discussions continue expanding suggests one important reality. The conversation is no longer centered around whether blockchain technology exists. The conversation increasingly revolves around how it may eventually be used. That shift alone represents a major change in market psychology. Perhaps this is also why so many investors are paying close attention to institutional behavior rather than daily price movements. Because major financial transformations rarely begin with dramatic headlines. They often begin with subtle changes in infrastructure planning, strategic positioning, and long-term capital allocation. By the time the wider public fully understands what is happening, much of the early positioning has already taken place. This pattern has repeated itself throughout financial history, and many investors believe the same dynamic could potentially be unfolding once again. Which brings us back to the central question. Is BlackRock's growing involvement in digital assets simply another chapter in the ongoing evolution of modern finance? Or is Wall Street quietly preparing for a future where blockchain infrastructure becomes deeply integrated into the global financial system? Because one thing is becoming increasingly difficult to ignore. The deeper institutions move into tokenization, digital assets, and blockchain infrastructure, the harder it becomes to dismiss the possibility that something much larger may already be building behind the scenes. And if that possibility continues moving closer to reality, the market conversations taking place today may eventually be viewed as the very early stages of a much bigger transformation. If you enjoyed this analysis, make sure to leave your thoughts in the comments below. Do you believe tokenization and institutional adoption will eventually transform financial markets, or do you think the market is still getting ahead of itself? As always, thank you for watching Crypto Brain. Stay informed, stay disciplined, and I will see you in the next one.